Hi guys, today we're going to talk about pair selection. Um, today we're going to talk about pair selection. The currencies in that pair, the session that you are trying to trade that pair, understanding the currencies in that pair, what's on and what's off, and how to use that to your advantage. So, we all know that there are three sessions: the Asian session, London session, and the New York session. Asian session mostly has high volume, so in the Asian session most of the time it ranges, but some of the time it trends. And the London session, we normally have a good trend during the London session most of the time, but if the Asian session is trended during the London session, we're most likely to have a ranging session. And then the New York session is also a high volume session. It's a very volatile session. Most of the time it does trends, but after the London session is closed, it tends to range a lot. But that also depends with what's going on in the market structure. Sometimes all of the sessions might range, and sometimes all of the sessions might trend. For example, if you take a look at GBP Friday GBP. So this was Friday GBP. This move right here was Friday GBP. This was Thursday GBP. So on Thursday, price actually went up at the opening of so this was Asian session. It ranged during Asian session, right? The beginning of London session, opening of London session, it spiked up and the price came down. And then towards the ending of London session, price made a move up. So this was the ending of London session, and the rest of New York session, price kept on going up. And then for Friday Asian session, price ranged. This was the range right here. And then the opening of London session, throughout London session and New York session, price trended all the way down. So as you can see, we have a downtrend right here. So you have to understand how these sessions work, which ones will range and which ones will trend. So it's something that when you're doing your analysis you look for. And if you don't see a range during the Asian session, then you should know that there are more high chances that during the London session price will range than trend. And if price ranges during the London session, then it's most likely going to trend during the New York session. You just have to look for the high volume times for price to make the move. So in Asian session, if price is going to trend, you should look around the opening times of the markets. The opening time and the closing time, those are the times that price will make the huge moves. That also goes for London session. The opening of London session and the closing of London session. If you're looking to trade London session, those are really good times to trade. You also should know that London session and New York session overlaps. You should keep that in mind. However, the opening of London session is a very good time to trade, and the closing of London session is a very good time to trade. And for New York, the opening of New York session, if price was ranging pre-New York, then the opening of New York session is most likely going to give you a big move. However, if price was trending in a way during pre-New York, don't expect a huge move during New York opening. It's better to consider the New York stock market for a big move. So if there is no big move during New York opening, there's going to be a big move during New York stock market opening. So whenever you see a range or a consolidation, you should always be excited, because that means a big breakout is about to happen. So when you notice a range, now consider, where are you in the market? What time is it in the market? If it's a good time in the market, then you should get a big move on the next high volume time. If it's ranging, look for the next volume time in the market, and then look for the setup that the market is presenting you. Understand the structure that the market is presenting you. that is one thing that you should understand about the sessions. It's always about understanding what structure you are at that moment and when the next high volume time is, and using that high volume time to your advantage. About the sessions, the next thing is to understand the pairs. So on the pairs, we all know that the pairs are paired against another currency. So we have a currency that's paired against another currency, hence we have a pair. So for Asian session, Asian session it also includes the Sydney market. That means the odd and the JPY are the main concern here, and also the New Zealand dollar. So the best thing to do when you're trading the Asian session, or if you want to trade the Asian session, is to look at currencies that only have is to look at pairs that only have odd NSD and JPY currencies. However, when you're looking at these currencies, it's best to look at a pair that's paired against a currency that's not on at the moment. So if I'm trading during Asian session, I'll trade odd USD or odd CAD or odd CGF or odd JPY. I would not trade odd JPY during Asian session because both odd and JPY are both on at the same time. Japanese yen and Australian dollar are both moving, both of their banks are open at that time. So I would not trade both of them at the same I would not trade both of them in one pair. I would go for odd USD, odd CAD or odd CGF or Euro JPY, GBP Jpy, NSD, USD, NSD, CAD. However, as much as you have a list of many currencies that you can trade, it's also best to understand which ones are the high volume pairs, which ones are going to be the most easiest to trade. As you can see, if you are trading odd USD, these are odd USD, we have more chances of it moving than odd CAD. So I have odd USD right here. It trends better than odd CAD. As you can see, this is our odd USD. It is a much better trend than odd CAD. This is our odd CAD. Mostly it ranges. It does not move as smooth as odd USD. It's mostly of a swing trader pair. A swing trader, what I call a swing trader pair, is a pair that you have to enter at higher time frames and you have to wait for long for you to see any results. That's what I consider odd CAD. So if you are trading Asian sessions, besides understanding that which currencies are on and which pairs to select, also select a high volume pair compared to a low volume pair. Odd USD or NSD USD would be a better pair to pick out than odd CAD or NSD CAD because they will barely move and odd USD is most likely to move. Then we have the London session. So during the London session, the most important currency during the London session is the pound and the euro. So we all know that these pairs, the GBP USD and the Euro USD, these pairs are highly correlated. That's the good thing about them. However, you should understand one thing. As much as they both move very well during the London session or the beginning of the London session, from my experience or from what I've noticed, pound USD is most likely to move more than Euro USD. In general, it's like that. However, if you are looking for a very nice move, it's better to look at pound USD at the beginning of London session. It will give you a very nice move and it will tell you the structure for the rest of the day. That is the good thing about pound USD. as you can see right here. This was the opening of London session right here. It moves very quickly, and this was also the opening of London session. It moves very well. So the opening of London session tells you how the market structure is going to be. So when price opened around here for London session, right? Price opened around here for London session. You see how price went down and then it came up. So price went down, it retested, and it kept going down. That's how the opening of London session tells you the market structure. So if I was to put a resistance right there, if I was to put a resistance right here, so let's say with our support right here, since price was above, we would say this is support because price was above. So this is support, right? Price broke, it retested, and it continued down. That's one example. If you want to look at another example, so this was the opening of London session right here. So price went up, so we have our support right here, or our resistance in this case. So price went up, breaking right, but price came down to close below. The moment it closed below our opening price, that means price is going to continue down. And it did go down. And when price came back up, it had more high chances of breaking because price was in a range and it failed to break the bottom of the range and came back up. And since it had broken at the opening of London session, since it did try breaking out, price now had more chances of breaking out because price has been tested. Now it's ready to break out, and it did break out. So this is not something that you should base your analysis only on. This is just a trick that you can use to make your trades better or to understand the market structure and what's happening for that moment. It's not something that you can only use. You have to use it with other things. So that's how the importance of the opening of London session is. So during the opening of London session or during London session, the best pairs to trade are GBP and Gbp Jpy. Why GBP? The opening of London session, it's only pound that's on. USD is not alive yet. That's why it's a good pair to trade. So GBP is a good trade to trade until the opening of London session. When New York session opens, it's still a good pair to trade. It does move very well, but then now it has two things that are affecting it. So one has to be stronger than the other for it to actually move properly. And in some cases, or in most cases, it is like that. However, the setups are now a little bit tricky. That's when you see your stop loss getting hit and then price continue moving in that direction, or price taking longer to hit your TP, because there are two things that are playing now. There are two things that are affecting the pair. So it's better to trade GBP pre-London session or London opening. That's it. The other good pair to trade is GBP Jpy. Pound yen is a very, very good pair to trade. Firstly, yen is closed both London session and New York session. So whatever setup it gives you during London session, it is most likely going to follow through. So this is pound yen. Pound yen, we have our high right here, we have our low right here, and we have structure right here. This is structure. If you see, price came up, came down, came up, and then came down. It broke, it retested, and then it came down. That's structure. And if price is to break my low right here, I would be expecting price to come down somewhere here first. And that is how I highlight, or this is how I draw my zones. This is enough for me. So if price breaks support right here, price would come back up here. If price doesn't break support, I know price is coming back to my previous now support, now resistance. Some people might call this a double top. However, it all makes sense. It all comes down to one thing. So this is our pound yen. See, pound yen moves very nicely. If you can understand the price, it's a good trade. Understand the structure of pound yen, and you'll be very lucky. So pound yen and pound USD moves very similar. If you want to know, if it's maybe during London session and you want to know what's really moving that pair, just check pound yen and pound USD. Then it should show you what's moving the market at that moment. If it's pound, then the pair should move in a very similar way. If it's USD, then you would see pound USD doing something a little bit different. So right now, if we take a look at pound yen, I actually caught this trade. This was the opening of London session. So price went down, it came back to retest the now resistance it broke, which was support, and then price continued down, If price had came down, retested, maybe come down, and then it comes back up to above or firstly back into the range and above the opening of London session, then I would expect price to continue going higher. I am not only expecting price to continue going higher based on the opening price of London session, but I'm expecting price to continue higher based on the market structure. Price is in a range right here. This is a range. So if price had broke, right, and it went down, it created a new low, and then price came back all the way up and it closed back into the range, then I would expect price to at least continue going up to maybe this area, this resistance. Since price is under, it's a resistance. Or besides that one, I would actually expect price to hit this resistance. Remember, a support or resistance, it's not a line, it's an area. This whole area is very valuable right here, because if price was to come all the way up and it hits this area, if I put my support right here, if price was to come back into this area, do you see this market structure? It's not a clean traffic. This is a very unclean range. Price is most likely to do the same thing. Before price made an unclean range, that should tell us that if price comes back to around that area, it's also most likely going to make an unclean range. The same way we expect price to move very nicely when there's clean traffic, it's the same way we expect price to make an unclean range when it arrives in an unclean range. It's all the same, there's nothing different. If you would like to explore your options, another pair that I would advise during London session is, so during London session there are actually a lot of pairs that you could trade because pound and euro are on. So you could trade euro USD, and if you were here for our previous lesson, you should know that euro USD followed through with our impulses. So we had 1, we had 2, we had 3, we had 4, and we had 5. Very nicely done. So I hope someone was able to catch the fifth wave. And how would you have caught the fifth wave? So this is our correction 2. The high of the correction 2, we put it on 4, and our trend line has been updated. Remember, you always update your charts. Never keep old analysis on your charts. Always update your charts, because market structure is always changing, it's always moving. There's always something more to consider. So we had our 1, right, that ended up here, if you remember from our previous video, and then we had 2, and then okay, let's do it this way. So we had our 1, we discussed why the 1 ended there, then we had 2, and then we had 3, and then we had 4, and we have our 5. Okay, so the last time we talked, price was around this area. This was the end of our 3. Price rejected that 3, it rejected to keep on going down, right? And then it made a correction. That's correction 4. We were expecting that correction. And then price came all the way down to create 5. So let me explain one thing quickly. So when price made this low and came back to close above, right, this could have been 5. It really could have been 5, because price made a low and then it came back to close back into the range, into a correction 4. It came back to close inside correction 4, and it did go up to retest our trend line, and then price continued down. This would be our initial 5, and this would be considered as a fake out. Other people would consider this as a fake out. Price went up, and then price came, it broke, and then it continued going all the way down. So if this is the low that price is made, if this is the new low that price have made, then I would expect price to come all the way up back here to where our previous support is and our trend line is. And if price breaks this, then we should see price continuing up. Why? Because there is a resistance and there's a trend line. That gives us 2 things that makes the confluence stronger. And if it manages to break and retest, that means we have a third confluence, and that should give price higher chances of continuing up than going down. That's if it does break. If it doesn't, it might give us a new high, and then price might continue down. That would aid for the bigger time frame structure. So you have to understand lower time frame structure and higher time frame structure. So back to the pairs. So you can also trade Euro USD, Euro JPY. I definitely would not advise on Euro CAD or CGF JPY or CAD JPY or CAD is not for London, but let's say Euro CAD. I call these the very complex pairs. They are very complex pairs. They are very complex pairs. They do not have the best market structure for a trade. These are much more of what I consider the swing trader pairs, because these you look to trade them on a higher time frames. Lower time frames, it's a little bit more complicated. You might see your stop loss get hit before price even attempts to go down. That's why I do not advise on pairs like this. I would advise, if you want to trade really well, I'd advise on maybe a selection of these pairs. So this is GBP pound, this is pound yen, this is Euro USD, and this is Euro JPY with Euro GBP, and with gold, and this is pound odd. I'm still experimenting with that pair, but think with time I would know if I should advise it on or not. See, this is CTFEN. How are you going to trade this pair? This is hard. Not hard, but it's a more complex pair, and it has wicks everywhere, so it's a lot more stress, and trading should always be simple. If it's stressful or if it looks complicated, choose another pair. You should be able to go on a pair and seeing something within the first 5 seconds. If you can't see something within the first 5 seconds, it's getting complicated. That means you should move on to the next thing. Don't ever stay on something that seems too complicated. So now we're on to the New York session. So New York session, it's mostly about USD and CAD. So when we look at CAD, there isn't much that you can trade on CAD, because if you are to look at CAD JPY, too many. If you look at CAD JPY is not that much of a bad pair to trade. However, if you are trading CAD JPY, you have to be very, 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 very patient, because these are pairs that are most likely going to move during news. When there's news, or when there's something that's really happening that will affect the markets, that's when they will most likely move. If there's no news, it's most likely going to consolidate or make these small body candles, and that's just irritating. So I would not advise on CAD JPY or another pair with CAD for USD CAD. The only problem with USD CAD is it normally moves during NFP, or when there's news, very important news that will actually move the pair. And it's really not a fun pair to trade. See, these are very small body candles. How many hours are you going to wait for your TP to get hit? We've all talked about patience. We all know you have to be patient in trading, but there's a difference between being patient with something that's worth being patient for, or being patient with a pair that has very low volume. If you're trying to trade a pair that is very low volume, it's better to make sure that you understand you're being a swing trader and not complicate your trading. This is a very low volume pair, and I definitely would not advise on it. Besides it being a low volume pair, it consolidates a lot, and there are two currencies that are on at the same time. That is a very bad thing. So if you want to trade during New York session, gold. If you can master gold could be a good trade to trade during New York session. I would only advise on gold. Gold or Euro, JPY or Pound Yen. Euro USD is also a good pair to trade during New York session, to be honest. Mostly, and also Pound USD. But the thing is, there are also two currencies that are on during those times, so it becomes very tricky, very, very tricky. However, most of the days it normally has clean structure. So if price was ranging pre-New York, it will give you a clean structure during New York session. But as we have all mentioned, if you like to trade during New York session, understand that USD is going to be the thing that's in control. All of the pairs are affected by USD. That's one thing we should also understand. If you're not only looking at technical analysis, you should also understand that all of the pairs are affected by USD. This is how. So if you look at pound USD, right? Pound USD is affected by USD in terms of, well, it is USD, right? And then pound USD affects pound JPY because of the pound. So let's say it's during New York session and pound USD is being moved by USD. Let's say USD is much stronger than pound right now and pound is very weak. You might see pound yen slowly moving in the same direction as pound USD, or it might just range, or it might actually move the same way pound USD is. But if it's moving the same way that pound USD is, it's most likely that pound is stronger or weaker than USD at the moment and it's taking over, and well, they all move in the same direction or almost the same direction. If you can look at these two structures, if you look at it closely, they are very similar. So if you look at them closely, right, you see how how can I say it? See this consolidation right here? It's the same one as this one. However, there was a day when pound was very strong, but USD was also very strong, that pound USD did not break out, but pound yen did break out. Why did it break out? Because pound was stronger. It was very strong. So pound yen kept on going up because yen was closed. However, pound USD did not break out because USD was also in the mix and it was slowing things down. So the only difference on these pairs, pound yen and pound USD, or euro USD and euro yen, is when New York opens. So it's best to trade during a session that doesn't overlap with another session, or choose a pair that only has one currency on at that time. I hope that makes sense. I think that should be all for today. I hope you guys understood and everything was clear. If you guys have any questions, please feel free to ask me. Bye guys. Clear.